Before we get started, I want to remind everyone that the information in this presentation is not to be or construed as investment advice. The information presented are subject to change without notice, and while we have made every reasonable effort to ensure that the content is reliable and accurate, we have not independently verified the content and are not responsible for errors therein. Please consult a professional advisor before putting a loonie in any of these financial markets.
Hi everyone, my name is Richard Diaz and welcome back to the IceCap Canadian Market Wrap. In this week's episode, we're going to dip our toes into a complicated and highly charged topic, and that is quantitative easing. At the risk of boring some of you to death, we're going to briefly explain what it is, its impact on inflation and asset prices, and challenge some of the claims made by our national broadcaster. A Canadian politician went on to the CBC, Canada's state-funded and supposedly impartial public broadcaster, to discuss the future of the Conservative Party's attacks as they remain in opposition. The dust-up started when the journalist suggested that record inflation Canadians have suffered was not due to the actions of the government or central banks, but because of the Russian invasion of Ukraine and supply chain disruptions. The guest took exception to the anchor's glossing over the role the government played in record inflation, and in response, argued that the government and the Bank of Canada were to blame. What interested me was the discussion about quantitative easing, and so that's what we're going to talk to you about today, my attempt to set the record straight. The obvious first question is, what the heck is quantitative easing, or QE for short? QE is an unconventional monetary policy tool used by central banks, like the Bank of Canada, to boost the economy in a recession or economic crisis. In very simple terms, if an economy is an engine, QE is like changing the fuel to oxygen mix to give it a huge boost. And here's how it works, again, in very simple terms. Central bank creates money by printing new money, digitally, not actual cash. But it's not much more than a few strokes on a keyboard. It then uses this money to buy government bonds or other financial assets from large financial institutions like banks. The more money banks have, the more they're willing to lend. This new money lowers interest rates. This is because bond prices and yields are inversely correlated. Buying enormous amounts of bonds lifts the bond price, think supply and demand, and lowers the yield or interest rates on those bonds. A lower interest rate encourages consumption and investment. And this boosts the economy by stimulating spending, creating jobs, and helps the economy grow. The injection of liquidity is not without side effects. Just like a junk food diet, it is not sustainable. A sugar high that can be fun for a while, but eventually you crash. So why did the Bank of Canada resort to QE? Well, it was in response to the federal government's decision to borrow nearly $500 billion during COVID. Running budget deficits of this magnitude means issuing a huge amount of debt. This debt, or paper, would never have been fully absorbed by the private sector and would have sent yields soaring. So in stepped the BOC and used quantitative easing, QE, to lend to the Canadian government and to keep control of the long end of the yield curve. Ottawa used this $500 billion or so for COVID stimulus and relief. This mostly involved paying people, companies, and government entities not to work or to work at much lower productivity levels, as was the playbook for much of the rich world. Meanwhile, the BOC lowered short-term or overnight interest rates to nearly 0% and literally told Canadians not to expect interest rates to increase again for a very long time. With nearly all Canadians getting fully paid to either not work or to work less, and the BOC telling everyone to borrow like a drunken sailor, Canadians and global demand for everything increased exponentially, and at a time when supply chains were severely constrained. Increased demand, lower supply, result, inflation. So yes, that's how the government and the Bank of Canada were complicit in creating 40-year highs in inflation. The point of QE is to inject liquidity into the economy, flatten the yield curve, and increase the price of financial assets. And that's exactly what happened. You might hear talk of settlement balances or the fact that bond purchases were done in the secondary market, but that is, of course, a red herring, a purposeful and, I would argue, malicious distraction. At one point, the BOC was absorbing nearly every dollar of federal debt issuance. And you can see that on this chart. The BOC's holdings of government bonds moved lockstep with the federal government's bond issuance. It was a textbook case of debt monetization, when a government borrows directly from a central bank to finance public spending instead of selling bonds to the private sector or raising taxes. People will forever argue about whether lockdowns and deficit spending were a good idea or not. But to say that money was not printed is kind of nuts, to be honest. Everyone in the industry uses the vernacular money printing, and the CBC, by harping on settlement balances, used a sleight of hand meant to confuse the viewer, a layman unfamiliar with the technicalities, ultimately to obfuscate the actions of the governing party that was responsible. Even Ben Bernanke, the former U.S. Federal Reserve Chair and the godfather of QE, called it money printing. There are other intended side effects of QE, which we are not going to get into, but these include the signaling effect, the exchange rate effect, or weakening currency to improve exports, increases in inflation expectations, which is different than inflation per se, but these are beyond the scope of this video. And then there's risk-taking behavior. With low interest rates and lots of cash floating around, safe investments like savings accounts paying very little, people and companies chased higher returns by investing in riskier things like startup, real estate, and exotic financial products. In Canada, QE suppressed interest rates and stoked an already crazy housing market. One could argue that this asset price inflation was even worse for regular Canadians than increases in inflation or CPI, as it permanently put owning a house out of reach for millions of young Canadians. As we wind down today's video, I want to address two claims that were made in the now infamous clip. We led today's video with a quote from former Governor of the Bank of England, Mervyn King. It was as follows: "Quantitative easing is an expansion of the money supply, although most central bankers are reluctant to describe it as such." Again, in direct challenge to the claim made on CBC, money supply did increase, as the chart shows, by nearly $600 billion, and it's not clear if it'll ever come down. The next is that the TV anchor actually went on to say, and I quote, "The Bank of Canada did not increase the number of banknotes in circulation in the economy." And again, this is wrong. The chart before you is a series freely available that the BOC publishes monthly called Money Stock, or currency in circulation, i.e. notes and coins. And you'll note that it soared by almost 20%. Finally, the problem that Canada faces is the $500 billion borrowed at nearly 0% has to be rolled over this year and next at much higher interest rates. This will cause an exponential increase in Ottawa's interest burden, which is already greater than healthcare spending. The Bank of Canada's money printing through quantitative easing has many side effects like inflation, asset bubbles, and inequality, a topic we'll save for another video, but that could take years to resolve. And denying its role in these issues only delays solutions and erodes public trust, both in the state-sponsored broadcaster and the custodians of our economy. All right, that's it for this week's video. Thanks very much for watching. Please like, subscribe, and follow for more. And as always, we manage money for families all across Canada and the world, so please feel free to get in touch.